What is going on, everyone? Welcome to the Hidden Edge Podcast Deep Dive. I got a I got a burning question to ask you guys. All right. Is a LATAM a good place to invest in? Is Latin America a good place to invest? That is in emerging markets. All right. It hasn't historically done as good as S&P 500 or the US markets. My question is Latin America, a good place to invest your money? Moreover, is fintech in Latin America a good place to invest your money? Well, let's go ahead and explore what that might be and if it is a good place to invest your money. This is part one of a three-part series to discuss a specific fintech company in LATAM that I've been invested in for quite some time and have actually doubled down tremendously in the recent lows it has. Let's get right into it. In case you haven't already figured it out, the fintech company I'm talking about in Latin America is Nubank. Specifically, the stock ticker is NU, Nubank Holdings. And I actually posted an article on Substack. I'm going to leave the link down below right here. If you go to this page and navigate to Substack, it is the part one article on there. You can actually find part two on there if you go there right now, if you want to review that before I create a video on it. But with that being said, let's go over part one together. Okay, so is Nubank the best setup for 2025? Well, I believe so because I made a goddamn article about it and I'm here making a YouTube video at 10 o'clock at night on a Friday. So, of course, I have nothing better to do. And there goes my conviction for Nubank itself. But let's go ahead and let's take a look at this article. Let me make this a bigger screen so you guys can see it. All right. So Nubank history and financials. Nubank is a Brazilian neobank founded in 2013, offering digital services like credit cards, personal loans, and digital payments through a mobile app. Headquartered in Sao Paulo, Brazil, it has grown rapidly to become the largest fintech bank in Latin America, serving over 100 million customers across Brazil, Mexico, and Colombia. Nubank went public in December 2021, achieving a valuation of 45 billion before ultimately come crashing down like the entire market. But I digress. Let's get on with that later. The company continues to expand its services and explore new markets, aiming to become a global leader in digital banking. So when you want to think of Latin America, and I get a little bit into this in part two, a lot of Latin American banks really served more of the upper class or the wealthy class and kind of considered their banking services to the population as a benefit or a favor to them. And they usually make their money off charging ridiculous fees, but these very wealthy and very affluent people who are banking with them could easily afford it. That's the reason why there were so many people who were unbanked, because they didn't exactly make it easy, even on a brick and mortar scale, to bank with them. But Nubank came in here and they disrupted the entire industry. They made banking available with cheap services through a mobile application and not really having to worry about the overhead costs of building physical branches around the entire country. And that leaves them with low cost for expansion and higher annual revenue per acquired customer. So we'll get a little bit more into that in this, but yeah, I mean, that's basically the background of it. You can definitely look more if you go to their website. You could read the article, or you could follow me on Twitter. My Twitter is this right here, x.com/samsol57. I usually post a lot of content on there discussing it. And of course, you can also join the Patreon and ask us questions regarding it. But we have a channel specifically dedicated to specific fintech companies in Latin America. So go ahead and check that out. So growth and deposits and loans for Nubank. Overall, the bank has experienced rapid growth, reaching 110 million customers as of September 2024. 1 second here. There you go. So it's easier to see. Actually, let me make it a little bit bigger. There you go. Accelerated growth in deposit loans. Overall, the bank has experienced rapid growth, reaching 110 million customers as of September 2024, up from 41.1 million in Q4 2021. Its credit portfolio, primarily consisting of credit card loans, is nearly 21 billion, reflecting a 47% year-over-year increase. Personal loans make up nearly a quarter of its total loan portfolio, showcasing its expanding financial services. And this is a chart that's taken from their recent earnings. And if you look at this chart, you could see that on an annual basis, their deposits have increased. Actually, not annual, sequentially. Year over year, 60% growth. But sequentially, this has went up 20%, this went up 5%, 16%, 9%, and so on. These are pretty big numbers for a bank. But specifically in Latin America, where honestly the TAM is much wider than the US, because when it comes to digital banking, there really isn't a lot of competition. If you think about the US, some people they ask, like, is SOFI a competitor of Nubank? Not really. They don't really overlap in terms of the population they outreach to. Maybe in the future, but right now, Nubank is focusing on emerging markets and the Latin American population. They might actually delve into other emerging markets as well, but they are not planning to go into the US. So let's continue here. Their total portfolio, and when I talk about portfolio, we're talking about money that they're using the deposits to loan out to other people to create that spread between the amount of interest they pay for the people who deposit money to them and the amount of interest they charge people that they loan out money to. This has actually increased 47% year over year. And as I mentioned earlier, the lending is a much smaller portion of this entire portfolio versus the credit cards. And that's mostly because of the risk factor. But if you want to find out more about that, you can go ahead and look on the presentation that's on their website. So, again, the bank is growing in terms of deposits and portfolio, but they're also growing a lot in revenue, and they're growing a lot in the dominance in Brazil. There's actually an interesting fact here that I have in the next portion: Brazil dominance in costs. As of September 2024, Nubank captured 54% of the adult Brazilian population as clients. Brazil's population continues to increase, leading to a rising total addressable market, or its TAM. Monthly active users are at 84%. The average revenue per acquired customer, or the RPAC, is $11, with a year-over-year increase of 25%. However, RPAC has decreased sequentially over the last 2 quarters due to the rapid expansion in Mexico and Colombia. Since RPAC is a monthly average, newly acquired customers initially bring the average down until their revenue ramps up. Despite this, the cost to serve each customer is only 80 cents and has also decreased sequentially. So we got 2 things here that are really good. All right, we have the fact that they're expanding very quickly in Mexico and Colombia. And on top of that, the adult Brazilian population in these countries is expanding rapidly, which means that their total addressable market is constantly growing every single year. In addition, their cost to serve each customer is only 80 cents. And they are getting $11 per year per customer. So that means their spread between the $11 and 80 cents is actually really good. And the 80 cents cost to serve, I don't think that's actually a metric that happens on an annual basis. I think that is more of a cost that's inputted into when they acquire the customer. So that's also going to increase over time the longer the customer is with the company. So over here, I got a couple of charts showing the significant increase in the Brazilian population on a year-over-year basis. This just continues to go up. When you have mature and developed countries like the US and China, this isn't necessarily a chart that continues to go up as rapidly as an emerging market like Brazil, as well as Mexico and Colombia. Over here, we have the chart taken from the last quarterly earnings of the RPAC, 25% increase from $10 to $11 year over year. And revenues increased 56% year over year. So these are doing really good. And this is of course an FX neutral basis. So even though these numbers might not appear exactly, this is converted into US dollars. So the discrepancy might be a little bit different, but overall they are growing at a pretty fast clip. So let's go over the interest income and margin. Interest income and margin. Net interest income, NII, represents the difference between the interest earned from Nubank's lending portfolio and the interest paid in its deposits. This metric reflects how effectively a bank leverages its client deposits. Nubank reported a net interest income of 1.7 billion, which grew 63% year over year. However, the net interest margin declined 19.8% to 18.4%. This decline was partly due to customers improving their credit worthiness, making them eligible for loans with lower interest rates. And over here in this chart, we could see that the net interest income increased from 1.195 billion all the way to 1.712 billion. So that is about a 63% increase. And you could see over here that the margin itself, which is pretty much the amount they earn in interest divided by the entire revenue, this has been steadily increasing until last quarter. It made a sequential decline down 140 basis points. So, that's something to really keep an eye on when it comes to these companies. There are risks pretty much with every single company that you invest in. But these are things that I noted on that really are a risk for the company and might be something that you just look out for the upcoming quarters. So, a notable risk to keep an eye on is the uptrend of the 90-day plus non-performing loans. Analysts have scrutinized management, and the strategy was to reduce the growth of their credit portfolio. And the strategy was to reduce the growth of the credit portfolio. On the other hand, Nubank has an excess deposits to their loan book, in addition to a healthy balance sheet of nearly $8 billion cash and $3 billion in long-term debt. So the net cash they have after subtracting the long-term debt is $5 billion, which is actually really good considering their market cap. And on top of that, like they were saying, actually, I don't have the chart over here, but they do have a healthy portion of their entire deposits. The deposits is much higher than their loan and credit portfolio combined. So it does provide that little bit of cushion in case things turn south. And I also have the chart here, also taken for the last quarterly earnings, is that we saw a downtick in the 50 to 90-day non-performing loans. For the Brazil consumer credit portfolio, this did have a downtick for the last 2 trailing quarters, but the 90-day plus has been increasing. However, to note, last quarter, this only increased by 20 basis points versus the previous quarter, it increased by about 70 basis points. So it might start slowing down. It might reverse a little bit. It really depends on the macro, but this, along with the macro that's been happening in Brazil lately, which I will post in the second video, that is when things kind of go pretty sour as far as the sentiment goes for the stock and for the positioning of the stock itself, which actually did provide an ample opportunity in case you got in that, because today it actually closed around $11. Just last week it was around pretty much near its lows at around $10.30. So hopefully you were able to get that. I still think there's plenty of upside in this company. Now let's move on to revenue and margins. In the latest quarterly earnings, Nubank reported $2.94 billion in revenue, marking a 56% year-over-year increase compared to fiscal year Q3. However, revenue growth decelerated considerably due to the previously mentioned factors. For a company of this size, sustaining a high double-digit growth over an extended period of time without sacrificing margins is very challenging. So you can't, let's be realistic here. And I think actually analysts do expect that. And there actually is an estimated uptick and acceleration in the revenue coming in 2026 into 2027. But without that set aside, unless if you think about Nubank and the amount of revenue they get from Colombia and Mexico, that's only a small portion of the amount of revenue they get from Brazil. And if Brazil is already grown to about 80% plus of their entire revenue, and it's already almost over 2 billion for just Brazil alone, you can't keep increasing that in a 56% year-over-year basis sequentially every single quarter. It can 1 or 2 quarters, but you have to be realistic that in order to continue increasing at that fast rate, you have to increase your costs to be able to continue acquiring that amount of customers at a higher percentage. So are they going to sacrifice that? I think now it's more about optimizing your margins. You have many stages for a lot of growth companies. I think they're transitioning from the growth portion into the profitability portion, in which they actually are one of the few companies that are profitable at this stage of their company, but they're still growing pretty crazy. 56% growth on 2.94 billion is no joke, and I even have a chart over here of their total revenues on a quarterly basis. And looks like over here, like look at this increase right here. This is up and to the right. This is up and to the right. It doesn't look like it's slowing. It doesn't look like it's going to go down anytime soon. Maybe it's going to slow down a little bit, but this is just up and to the right. If you go all the way back here to December 21, when they went public, they only made $260 billion in that quarter. And then just last quarter, they reported a couple of months ago, 1.5 billion. That's a phenomenal increase. Like when I say stuff like this, it just makes no sense why this stock would get sold so far down. And that presents us with this opportunity. Gross margins for last quarter were 46%, translating to 1.3 billion. a 67% year-over-year increase in absolute terms. Profit margin stood at 19%, growing 108% year-over-year in absolute terms to $553 million. So gross profit, 67%, gross profit margin, 46%. Great. Net income, $553 million, and that grew 107%. And the adjusted is 592, but we just really want to focus on the net income for the non-adjusted. But the chart over here, again, taken for the last quarter, Q3 2024. If you look at the amount of customers that they acquired in the millions, you could see here that around here they introduced Nubank Mexico, and they introduced Colombia over here. But that has tremendously helped the amount of customers that increased, and it's only going to get better over time when it comes to their profitability. Excuse me. And now the final part here, presence in Latin America. Since its inception, Nubank operated exclusively in Brazil until it expanded to Colombia and Mexico in 2020. The secular growth in digital banking during COVID-19 enabled Nubank to rapidly gain market share. The company's plans for Mexico were outpaced by the rapid growth in this previously untapped market. Before Nubank's entry, over 66 million people, or 50% of the population of Mexico, were unbanked. Today, analysts speculate that Nubank might expand into neighboring Latin America countries. CEO and founder David Velez has hinted at potential expansion to Argentina in the future. So something to keep in mind. I really recommend you guys go ahead and listen to those conference calls. Review the earnings, do your own due diligence. This is not financial advice. This is just telling you what I'm doing and what I kind of see in the market as far as opportunity goes. And I really hope you guys enjoy the show. If you haven't, go ahead and support the channel by liking and subscribing to the video. Kris and I, we have a lot of podcasts that we do on a weekly basis. Took a little bit of a break recently, but we're planning on getting right back on the schedule starting on Monday. Hope you guys enjoy that. Again, my Substack is samsolid.substack.com. That is the Hidden Edge Capital Substack, which Kris and I write to very frequently. And my Twitter is x.com/samsolid57. Hope you guys enjoy the show. Talk to you later.